Good afternoon. Thanks for tuning in. You're watching Ask BQ on BloombergQuint Live. I'm Navneet Saluja D'Souza.
Hey Navneet, I'm Alex Matthew. If you've got questions on equity, then you know that this is the perfect show for you. You can send them to us on any one of our social media platforms. That's Twitter, Facebook, YouTube, and WhatsApp. You can also call us on 022-454-04141, or you can mail us on askbq@bloombergquint.com.
Okay, before we get to the individual queries on the show, let's quickly tell you what's happening with the markets. After yesterday's rebound, we've seen markets correcting once again. And remember, yesterday's rally was mainly on account of short covering for the frontline indices. And talking about short covering, today is also the day when your monthly contracts expire, on back of which definitely there can be some volatility going into trade, at least for last 1 hour. Nifty's been trading firmly below its 50 DMA right from the word go in the morning, which is somewhere about 12,130. So 12,050 is with 80-point cuts is somewhere where Nifty is currently trading. Sensex is down about 265 points, and the fall has come in even for broader markets which have outperformed so far in the January series. So you've got the mid-cap index seeing cuts of about 0.5%, and I think small cap index also sitting with some amount of cuts right now. Market breadth should also come up on your screen, giving you an indication as to what's happening with the entire listed universe, and it's not looking good at all because it's firmly in favor of the declines. The ratio seems to be somewhere about 1:4, and the contributors list should also come up on your screen among the Nifty constituents. I think a couple of financials seems to be contributing, but clear underperformance coming in from your heavyweights, Reliance and HDFC Bank, and also something like Infosys, which are trading with some bit of cuts. Today is the day for expiry, so I quickly want to highlight a couple of option strikes too, which are active. On the call side, you've got the 12,050, 12,100 call strike, where aggressive writing has come by. So 12,050 call has added 32 lakh shares, and 12,100 call has also added about 68 lakh shares. We'll see if the 12,000 level gets defended, because throughout this monthly series, this was the strike where maximum open interest was. So 12,000 put is seeing further. Can we just pull up that strike? Yes, that's seen further addition, giving you an indication bulls will look to defend the mark of 12,000 in today's session. So 12,000 on the downside to about 12,100 on the upside is something you should watch out for. Very quickly then, a couple of stocks: Escorts, Jubilant Foodworks, your gold financing companies from the likes of Manappuram and Muthoot are outperforming. And from the loser side, you've got negative reaction coming in from stocks like Godrej Consumer, Aurobindo Pharma, and also something like MCX, which has fallen quite sharply in trade today. That's down by about nearly 6%, Alex.
All right, now before we get to the questions on this show, we've got Crompton Greaves Consumer Electricals. The management is joining us. The profit doubled, remember, in the December quarter, thanks to a one-time write-back, and operationally the numbers were steady. But joining us to take us through those numbers and also perhaps to give us some outlook on the year to come is Shantanu, Khosla, the Managing Director of Crompton Greaves Consumer Electrical. Thank you so much, Mr. Khosla, for joining us. My name is Alex Matthew. Could you take us through the key numbers? Operationally, it was steady, but there was also that write-back. Could you tell us what that's about, and also on the margins?
Yeah, sure. Overall, we had a pretty decent quarter, and it was particularly strong on core ECD business. Overall, our ECD business, the volume was up 11%, and so was the revenue. This was driven really by all three key segments: fans, which had close to double-digit growth, pumps, and appliances, which is our key focus area, especially geysers in this winter, grew in excess of 50%. Along with this, on ECD, our margins also grew by about 100 basis points as we continue to drive for greater cost efficiencies, and market share also grew in fans and geysers. Our second business, lighting. Our lighting business, the volumes continue to be robust. Our volumes grew, LED volumes in the B2C part of the business grew at 13%. As I've talked before, however, on lighting, there has been consistent price erosion across the industry. The good news on that, however, is over the last 3 to 4 months, we have not seen any further price erosion. So hopefully, as this settles down over the next couple of quarters, with the volume growth of double digits will translate into value growth also. We've continued to drive out costs, so sequentially our margin has also gone up on lighting a couple of points. The second part of our business in lighting, which is our B2B business, however, remains a challenge. Here, essentially, it is because of the slowdown in investment, both in government and private investment in infrastructure. And that part of the business we expect to stay a little soft till the overall picture picks up. But on our consumer business, really, we are not seeing any significant impacts of demand slowdown, and both our volumes, market share, revenue, and also importantly, our margins continue to grow. Our operating margin was up 25% in terms of profit after tax. However, as you rightly mentioned, there was a one-time write back of a tax based on a favorable order which we received from the tax authorities, which drove the exceptional growth of doubling PAT for this quarter.
Very quickly, Mr. Khosla, I just want to get your view on the margins. As you pointed out, there were cost-saving initiatives, perhaps also some element of the product mix that led to that higher margin that you reported in the quarter. Is that likely to be sustainable? And also, what is the outlook with regard to FY21?
Well, in terms of margin and really how we think about it, we believe actually our ECD margins are now competitive and best in class. So really, while we will continue to drive for efficiencies in our cost and our effectiveness in the rest of our overheads and programs, our focus really will be on investing these savings into revenue and market share growth, as opposed to just simply working on building the margins, because they are, like I mentioned, pretty much best in class now. So we can create more value if at this margin structures we continue to drive for even greater growth. In terms of the outlook, well, we really don't give guidance, so I don't want to talk about any specific numbers, but our overall objectives, which we have really been more or less meeting over the last few years, is to ensure that we grow our top line faster than the market, i.e. grow market share, grow our bottom line at least as fast as top line, i.e. at least hold margins, and convert our profit into cash.
Sure. So you've highlighted that you are not witnessing any sort of demand slowdown. So can you tell us how's the order book been like, and specifically within that, has there been any slowdown, at least for government-related orders so far?
Yeah. See, most of our business, except part of our lighting business, is really B2C. So there's no question of order book. And largely in this part of the business, we are not seeing any significant slowdown. In the B2C business, the only pocket where over the last few quarters we have seen a bit of a slowdown is in our agricultural pumps business, which is largely rural. Our fans and other businesses are largely urban. So in the rural business, we've been seeing a little bit of a slowdown, though that's not a significant business of ours. In our lighting B2B, which is both business to business and also business to government, here definitely we have seen a slowdown over the last few quarters as investments have got delayed, projects have got delayed. But again, that's not really the core of our business. Most of our business is B2C.
Fair enough. A point well taken. Just leave us with the capacity utilization of all your plants, and what are your expansion plans going into FY21?
Well, right now we are pretty okay from a capacity point of view, though our utilizations are high, and we've invested in areas such as automation to increase the utilization of current plants and assets. We're okay for the next couple of years, so we are currently actually actively working on capacity enhancement and investment plans, which we will need 18 to 24 months out to meet our demand requirements.
All right, sir. I believe that more or less covers the picture. Thank you so much for joining us on this conversation, and wish you luck in the quarter going forward. All right, let's turn to Ask BQ now, and thanks so much for giving us the patience and listening in. But we've got two experts to help you out today. We've got Ashish Kelkar of Kiran, Jadhav and Associates, and also Astha Jain of Securities, who are here to answer all of your questions. Thank you so much to the two of you for joining us on this program. I want to go to you first. Ashish, do you have any picks for us? And also today's expiry, what are the levels that you're watching for?
Okay, first I would like to talk about Nifty. Good afternoon, Alex and Amit. See, basically, if we look at Nifty, as discussed in the last show that we had a couple of days back, my view is still bearish. And in that show, I had given the level of 12,000 and 11,918. This is where the markets are heading as of now. So I'm expecting the expiry of today's trading session or the monthly expiry of indices, of particularly Nifty, near 12,000 and 12,050, which is as of now the levels are. So in this range only, I'm expecting the expiry. We need to have a very close watch on 12,000 mark, 11,980. So these 20 points are very crucial for the indices, because if we draw a trend line which is drawn by joining the latest bottoms, this level is very important. If this level is taken off on the closing basis, then definitely a further sell-off can be seen in the index or the markets. So long positions are definitely not recommended in the current scenarios, and short position in index, I will take further short position if the Nifty closes below 11,980.
Okay, and of course that 12,000 remains a key level to be monitored, but let's start addressing viewer queries as well. And I'm going to take Praveen Matthews' query. He wants fundamental view on some chemical companies, and one of them is SRF, which has been doing pretty well. He wants to know which is a better pick. Is it SRF or Atul? Astha, hi, good afternoon. Would you advise someone to buy into these chemical companies? And this as a pocket has been outperforming. We've seen the numbers also from the likes of Navin Fluorine. They've put up a good show. What is your favorite stock in this space, and if you have two or three, which one tops your list?
Good afternoon, Naveen. Yes, chemical companies are really looking strong at this momentum, and we are recommending our clients also. Even in fact, in our PMS also, we are recommending chemical stocks. So now talking about SRF in particular as well as Atul Limited, these two stocks are really looking very strong. But if I have to choose any one of them, then definitely I would like to go with Atul Limited, because the balance sheet is in a very strong position in this company. So between these two, Atul Limited, definitely I am liking the most. But talking about other chemical companies also, my favorite is Navin Fluorine, as the results were already out, and we have seen the company is being able to show stability in their margin performance this time. So I'm really liking Navin Fluorine. In fact, Deepak Nitrite and alkyl amines are also looking very strong. And as we know, Relis India, although it is not exactly into the chemical, it is into the agrochemical space. But again, this counter is also looking very strong. So we are recommending these 2-3 chemical companies to our clients. And my answer is that Atul Limited is looking better than SRF at present moment of time.
All right, that's a comprehensive view for you in the chemical space. I'm going to take a question from YY on Ujjivan Financial Services. The stock is currently trading about 1% or so in the red at 369, but he's looking for a short-term view. Ashish, 1 month specifically, how does it look?
Definitely the stock is very good, because it has given us a breakout of an ascending triangle pattern formation 4 trading sessions prior. The stock has rallied from a level of around 322 to a level of around 375, 380. So after such a rally, there will be a price and time correction, and that is what is happening as of now. If someone is holding the stock, definitely I would recommend to hold on. The stop loss is a bit down, but the stop loss would be very comfortable, and that stop loss is 357. Till the time the stock is above 357, the stock is looking very nice. Definitely hold on. A fresh position is recommended only above 380, because it will be another breakout. At 380, there is the call writers of around 2 lakhs of shares. So this will act as a strong barrier. Above 380, there will be a fresh demand, and the stock can go up to 395, above 380, if it closes above 380. So definitely hold long positions only above 380.
Okay, that's the technical view on Ujjivan Financial. We're also getting a lot of mail queries. So Abhishek Manud writes to us on email. He wants to know if PSU bank stocks are a good bet before the budget on 1st of February. He's holding 500 shares of PNB, which he's bought at levels of 78.5, and also wants to know if current levels are good enough for him to average, as PNB currently trades at 60 vis-a-vis his buy level of 78. Astha, are you looking at PSU banks? Are they good bet? Could be a better bet on valuation front, but still, do you think private banks are still better? Looking at how the quarterly performance have also been, come up for the December quarter.
Yes, Navneet, although the PSU banks are looking better on the valuation front, but my idea is that one has to choose the stock where the growth is there, because in the PSU banks, we are all aware that there are problems with their NPAs, and even there are problems with the capital also. So my idea is, rather than going with the PSU banking, private sector banking is looking good. In fact, Navi, the kind of results which are flowing into the private sector banking space also, we are seeing this NPA concern is there with most of the bank, maybe through the Kisan credit cards, or maybe in the case of Kotak Bank credit card, or the unsecured portfolio was witnessing some sort of problems in their, I should say, NPAs. So my whole idea is that even in fact private sector banking are also seeing this NPA problem. So it's better to stick with the private sector banking only rather than public sector banking. In that, only ICICI Bank is looking attractive at the present moment of time, and our price target for the same is somewhere around 630 to 640. So I would like to suggest go with the private sector banking space, in which ICICI Bank is looking good for the target of 630, 640.
All right, let's pull up Aarti Industries. It's had a stellar 2020 so far, gains of about 17%, but Adarsh is looking for a short-term view. From this point on, Ashish, do you have a positive view on this one, and would you be able to give us a target and a stop loss?
Definitely. If we look at today's trading session, in today's trading session, there was a heavy selling pressure on the higher sides, and the stock has made a low of around 945. So 945 is very strong level for this particular counter, and this is where we have seen the bounce back in today's trading session. This for 945 is also a level which earlier it has made a top. Now the resistance has become support, and that's the reason why it is very important. So if someone is holding the stock, definitely hold with a strict stop loss of 945 on a closing basis. My first target for this particular counter would be 1000, and the second target would be 1020, and this target should be achieved within next couple of weeks.
Yeah, that's Aarti Industries for you. Last 6 months, in fact, the stock's down about 40%. Okay, let me take a query on Motilal Oswal. Matt Matthew writes to us. He wants a 2-month view here, as he's already holding 500 shares of this company at a level of about 750. He wants to know if he should look to book profits or he should add more at current levels. Ashish, I come back to you. Entry price is 750. Stocks almost trading at levels of 800. What should he do? Should he book profits or he can look to hold on? If yes, what should be the stop loss?
Currently the stock is trading at around 799. Am I right?
Yes.
I did.
Yes.
See, overall chart structure is very good. Now the stock is in a correction mode, and it is correcting from a level of 900 to around 800 levels. This 800 is very important level for this stock, so definitely I would recommend him to hold on with a strict stop loss of 780 on a closing basis. If we get a very good pullback rally in this particular stock, then the stock can go up to 875. So what I would recommend him is hold on with a strict stop loss of 780 for the target of 875.
All right, we've got a question from SP Red on Facebook about a couple of MNC companies, Procter & Gamble, Hygiene and Healthcare, and also Gillette, and whether or not these are good investment ideas. Astha, based on the fundamentals, would you recommend them?
I would like to go with the Procter & Gamble, Hygiene and Healthcare, because their main brand is Whisper, which is really working very well for this company, and this company is into hygiene space, and it is really very much under-penetrated market in the organized space. So my whole idea is PNG, Hygiene and Healthcare is looking better than Gillette, because even performance-wise also Gillette is not showing strong financial performance even in the last quarter also. So it's better to go with the PNG.
Okay, and pull up Cummins as well. One of our viewers is holding Cummins at 608. He wants a technical advice. He wants to know if he should look to book losses or he can look to average more at current levels. Remember, the earnings came out day before yesterday, and yesterday morning it had a gap up opening where the stock was up 9 to 10%. It cooled off from those levels, finally closing with gains of 2% yesterday. But Ashish, it's down 1.5% today. If somebody's entry level is 608, what should they do?
See, definitely I would recommend him to exit, because the chart structure is not very attractive. Though there was a strong spike a couple of days back, but that was because of the news, and the spike was with heavy volumes, and at the end of that trading session there was a heavy selling pressure. So this shows that there is a weakness in this particular counter, so it is better to exit from this.
All right, Divis Labs Astha is a stock that a lot of analysts are liking at the moment. Stock is currently trading just a bit under pressure today, 1% or so, having started in the green. What's the view here? We've got a question from Narasimha Murthy, and he's looking to hold for at least a year.
Yes, definitely. I would like to recommend that one can really stay invested in the stock because Divis Labs is looking very strong in the pharmaceutical space due to the strong, I should say, EBITDA margin which this company is really posting. So my idea is in the pharmaceutical space, this company is looking strong. One can stay invested and can expect the upside of around 15 to 20% from the current levels.
Okay, that's Divis Laboratories for you, and this is a question now which we get almost every day. Astha, I come back to you. If someone who already has exposure to HDFC Life, what would your advice be? To add more of that stock, or rather one should look to add SBI Life in their portfolio?
Because if we look by the valuations, then SBI Life is looking better, or it is looking cheaper than HDFC Life, and hence my view is that one can really go with the SBI Life also. If one has to choose between these two, so my idea is it's better to stay invested in the HDFC Life. For the new entry, one can go with the SBI Life, but I think there is no harm in staying with the HDFC Life because the growth is quite high in this company. So one can stay invested in the HDFC Life, but for the new entry, SBI Life is a better choice.
All right. Now, I do know that we've taken a question on Procter & Gamble, hygiene and healthcare, and Astha has a positive view on the counter. We've got a question from Lazy Bull, a viewer on YouTube, and he's looking for a technical view based on the correction that has been seen from levels of 12,774 or 12,000 rather 241 just a few months back, in fact. So Ashish, on the charts, how's it looking in terms of the technicals? It's a buy on the fundamentals, but what are the levels you're watching out for?
You're talking about Procter & Gamble, I think?
That's right.
Yes, definitely. There is a undercurrent in this particular counter, but there is one level for which I will wait to have a fresh entry, and that important level is 4,500. Currently, the stock is trading at around 4,396.97.
I think you've got the wrong. The stock is currently trading at 11,225.
Okay.
This is Procter & Gamble Healthcare and Hygiene and Healthcare.
Now, definitely the same chart structure can be seen over here. The only difference between these two charts, currently this stock is trading in a narrow range, and this important level for this particular counter, PGHH, currently the stock is trading at 11,225. Important level for this stock is 11,420. Till the time the stock is below 11,420, I will not advise a fresh entry into this stock. Once the stock price crosses 11,420, it will be a fresh breakout of a flag formation which has a bullish implication, and in that case the target will be again 12,000 rupees. So definitely a fresh entry only above 11,420.
Okay, let's move on and address CDSL as well. Rohit writes to us. Astha, a lot of market experts have been bullish on CDSL, and some of them have also given that as a pick of 2020. And the stock actually has given returns in the last 2 or 3 weeks. It's been trading close to its 52-week high levels. Do you like this counter fundamentally?
Yes, I'm liking this counter, and one can even keep the stock in their portfolio for the time horizon of 2 to 3 years because this company is really looking very strong in the financial services because it is providing financial services. So I think in this space, this company is really looking very attractive. And if we look at their balance sheet also, it's very strong. So ultimately, this counter can really give upside of more than 20% in the coming 1 year or so. My idea is yes, one can stay invested.
All right, it's time to hit the rapid fire segment. Remember, this is where we try and get as many questions in as possible in a span of 2 minutes. Just a quick reminder, keep your answers as short as possible to the two of you. We've got a question from Karan Singh. Sudarshan Chemicals on the technicals, 3-month view, if you have one, Ashish.
Definitely. Sudarshan Chemical is a good stock to hold. Currently, it is in correction mode. Hold with a stop loss of 451 for the target of 480.
Ashish, at what levels would you advise buying into Reliance Industries?
Reliance Industries is in a correction mode. Currently, the stock is in a bit down. Next important level is 1,420. So buy at near 1,420 and 1,400.
All right, so Neil Singh is asking for a pharmaceutical company, Indian pharmaceutical company with good products and no FDA complaints, Astha.
Right now, I'm liking Ipca Lab, although FDA complaints can be there, but right now it is not there, and their domestic formulation business is doing very well. So Ipca Lab is my choice in the pharmaceutical space. Otherwise, MNC pharmas are also looking very good, in which AstraZeneca pharma is looking very attractive.
Okay, Ashish, I'm going to come to you. Nippon Life bought at levels of 343. What are the charts indicating?
Okay, I'm not able to open the chart, so I will answer the question.
Okay, no problem. Astha, I'll come to you. Of course, the ticker has changed, Ashish. Just for your reference, it was ADNAM, and now the ticker has been changed to Nippon Life. Astha, your views on ADNAM? Or Nippon Life, sorry.
Nippon Life is looking very strong because in their quarterly results, they have shown the growth of more than 60%. So this company is looking very strong. My idea is, yes, one can make a new buy also, or even if one has this stock in their portfolio, then they can stay invested. Ultimately, we are expecting.
All right. Yeah, so that's a buy. We got a technical view asked on Bata for 3 months, holding 100 shares. What's the view, Ashish?
Definitely hold on. If the price goes above 1800, the first target is 1860, the second target would be 1890. Hold with a stop loss of 1890.
Astha, any views on JSPL?
JSPL is looking strong only in the long term, but in the short term, my idea is stay away from it.
All right. Well, that's unfortunately all the time that we have on this edition of Ask PQ. We'd like to thank both our experts. Thank you so much, Ashish, as well as Astha, for helping our viewers out with their queries.
Well, we're just a tweet, post, or a call away, so please keep your queries coming, and we promise to address at least most of them through our shows. In fact, for all our previous episodes, please visit our YouTube channel or our website, BloombergQuint.com. Thanks for watching. Stay tuned to BloombergQuint.